Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Thursday, January the 24th, 2008. The headlines out of Switzerland this morning said the Fed's rate cut did little against the fears of a global recession. The yen fell on Wednesday as U.S. stocks rallied at the close, boosting a demand for riskier assets. The earlier declining stocks in the United States and Europe encouraged investors to reduce exposure to riskier assets despite the Federal Reserve's hefty interest rate cut on Tuesday. Moves in the stock markets are seen as a barometer of the investor's appetite for carry trades, which is the borrowing of the yen or other low-yielding currencies to buy higher-yielding assets. Analysts are saying the Fed's 75 basis point reduction in its benchmark overnight lending rates to 350 did little to calm investors' fears of a U.S. recession and its impact on the global economy. The Fed is widely expected to cut rates again at its next policy meeting on January 29th and 30th. Investors continue to fear a possible recession in the world's largest economy and wait for the ECB to give indications that they may intend to follow the Fed's rate cut or not. Yesterday, the dollar-yen dropped to 104.97, its lowest since May of 2005, before recovering up to 106.75. The dollar Swissy slipped 46% to 109.19, but then has continued to drop down to 108.63. Currencies such as the yen and the Swissy tend to attract flows during periods of uncertainty, as the low interest rates reflect the capital surplus of their respective countries. Analysts are saying that investors were disappointed that other central banks, particularly the European Central Bank, had not followed the Fed's emergency interest rate cuts. Eurozone interest rates futures reflect expectations of around a 75 basis point cut of the ECB, easing this year from the current 4%. With the first cut expected before June. Futures at the start of January had pointed to the ECB being on hold. Since the first of the year, the rate cuts for the ECB have been a no-go, a go, a maybe, a no-go, and now a maybe again. So this is not something I'm betting the farm on just yet. New Zealand's central bank left interest rates unchanged at 8.25 as expected. The New Zealand dollar had traded down 31% to around 76.34. It has since retraced just slightly to 77.26 area. The euro dollar traded in a straight pattern around 146.20 levels in the Asian session, while the dollar yen fluctuated slightly as speculations of political pressure would force the Bank of Japan to lower rates. The Asian stock markets and European stock futures were both positive, which is an optimistic sign for traders seeking signs that the confidence has been restored or it is at least in process. China's economy grew by 11.4% in 2007. That's the fastest rate in 13 years, but slowed in the final months of the year as global demand slowed and rate increases took their toll. The fourth quarter GDP growth eased to 11.2%, slightly below the forecast of 11.3%. Japan trade balances were lower than expected, dropping to $877.9 billion versus $946.5 billion, showing signs that the slowing global economy is weighing on exports. Exports to the U.S. were lower, and exports to Europe, Asia, and China diminished also, but only slightly. However, because of higher oil prices, their exports to the Middle East and Russia managed to post a positive figure. In a separate note, the LDP policymakers submitted a plan aimed at boosting stocks. The proposal requested to put an end to taxes on stock capital gains, develop an SWF to purchase Japanese stocks, and set up a sovereign wealth fund to buy Japanese stocks. In addition, the same legislators also hoped that the Bank of Japan would cut rates and return to a zero interest rate policy. The Eurozone IFO survey is likely to reveal further signs of a slowdown in the German economy, although this disappointing figure should lessen the impact. The markets today were watching with greater attention the U.S. initial jobless claims in light of increased volatility and the lackluster of other economic data. A recent downward trend in claims hints that perhaps the labor market has somewhat stabilized. Also, Sojin is expected to announce a Euro 7 billion write-down from credit and fraud losses, which will keep the markets and traders on edge today. The dollar was mixed in the European session. The dollar was stronger against the yen and the Swissy, and weaker against the remainder G10 currencies as risk appetites increased with stock markets. The German Business Climate Index rose to 103.4 versus a 103.0, and even higher than anticipated, which was 102.3. This is an encouraging sign that despite the recent turmoil in global markets, the activity in the real German economy is holding up. U.S. initial jobless claims for January dropped to 301,000, which is lower than what markets were expecting at 320,000. However, the market shrugged off this positive data, leaving the dollar mostly unchanged. The U.S. equity market looks like they are going to follow the European market into positive territory as the momentum gains ground. U.S. existing home sales and comments from U.S. Secretary Treasury Paulson, ECB's Trichet, and Alan Greenspan should round out our day. That concludes our news for today. We hope you have a wonderful trading day and look forward to seeing you very soon. We would also like to invite you to check out our website at www.succeedinforex.com. There you will find information about our Traders Trading Room and also our link to our Yahoo forum, which is also Succeed in Forex. Have a great day, and we will talk to you tomorrow.